Hi, I'm Tom Stelzer and welcome to Livewire's C-Suite reporting season coverage for 2026. With me today is Gordon Bell, CFO of Zipco, to discuss the company's FY26 results. Gordon, thanks for joining us today. What would you say are the most important numbers out of the results that investors should be aware of?
Look, first of all, we're really pleased with the 26 result we've delivered. Another year of significant growth and profitability for Zip. So we exceeded our FY26 guidance, underpinned by record earnings in both markets. So the key highlight was a record group cash earnings number of 269 million Australian dollars, which is up 58% year on year. And alongside that, the operating margin, which expanded 420 basis points to 20%. And all of this demonstrates the earnings power and the operating leverage in the business. So if we unpack the drivers of those numbers a little bit, the total transaction volume for the group, grew 27% to 16.7 billion, with the US being a star performer there, up 42% year on year. And, income increased 25% to 1.3 billion, with a strong net transaction margin of 3.9%. We managed to achieve all of this with a strong credit performance outcome, with group net bad debts at 1.8% of TTV. And importantly, we've still got a very, very strong balance sheet with $247 million of available cash, which enabled us to both neutralise the EIP program and also announce an on-market buyback for another 50 million of shares. So all in all, we're growing strongly. We're becoming more profitable with, even more solid foundations. Our customers are choosing Zip more often, and this is giving us a great platform as we move into the next phase of growth.
And as a leader, what are you most proud of from the results?
Well, first of all, I'm really proud of what the results, say about our relationship with our customers. So if we take a step back, it all starts with our customers, and we at Zip are here to provide appropriate services and product offerings, where traditional financial products have let them down. We're seeing, deep customer engagement with strong NPS scores. We have plus 72 in the US and we're plus 76 in ANZ. These are super outcomes, and they reflect the trust and confidence that customers have in Zip, and our customers are now transacting over 13 times per year in the US, which is up 23% year on year, and they're transacting 27 times in ANZ, which is up 17% year on year. So customer engagement is certainly first. And then secondly, really proud of the consistent execution across the business. We've delivered record cash earnings, expanded margins, and generated, really strong growth while maintaining a strong balance sheet and setting ourselves up for the future. And the two things that stand out there are, in the US, we delivered more than 40% TTV growth, for the second year in a row. And in ANZ, we more than doubled our cash earnings to 69 million. So, these are fantastic outcomes that, are all made happen by success with our customers.
And what would you say are the areas for improvement over the next half or full year?
Well, these results marked, more than $300 million of turnaround, over the last 3 years. And so that in itself is the platform. And that really unlocks the next phase of growth and innovation for Zip, which we are super excited about. So the key opportunity for Zip is to solve more customers' everyday spending and cash flow management needs. And there are two key areas here. So the first one is to continue to strengthen our core offerings. We've got great products in both markets, products that our customers use and we get super feedback on. And we want to keep doing that and keep deepening that relationship and those engagements that I talked about earlier. The second is very exciting, is where we invest for the future of Zip and our customers. So what do I mean by that? So we announced some fantastic initiatives yesterday with our results, which we would love to have products offered by Zip. In the US, we're looking at bill payment smoothing. We're looking at features in our app to help customers, get ahead on these payments. We're looking at potentially a cash advance product And we're also looking at products that help our customers with their rent payments and making sure that they're handled in the right way. So all of those items are in development, and we're excited about where they would go. In Australia, we're expanding product offerings as well with our capital light initiatives. We've launched our Z mobile offering, which is scaling nicely, and we've got a couple of others in the pipeline, which we'll talk about later in the year. So at the same time, as expanding and deepening the core, we've got really nice initiatives that allow us to keep growing at scale.
The US is a clear area of opportunity. What's the outlook there?
It's a great opportunity and one that we are really excited about. If I just take a step back and recap, let's set the scene on the market opportunity in the US. So it's a very early stage market there, given the buy now, pay later product still represents less than 2% of US payments and approximately 6% of e-commerce. So if you compare that number to a more established market like Australia or some parts of Europe, it's more like 15 to 20%. So there's a huge opportunity there in the sector more broadly. The second part that makes us excited with our US opportunity is we serve a differentiated customer. There are more than 100 million hardworking, low to middle income Americans who are underserved by traditional credit. And so what we're seeing is those customers want to build relationships with Zip. They're choosing us more frequently, and they want to use us across more areas of their everyday spending. And so that really is the opportunity for us to lean in there and provide them offerings and services that allow them to do that. So we've delivered a second consecutive year of growth in more than 40% of volumes, and we really feel that our scale in the US will be further buoyed by some of the new offerings and new products that we hope to bring to market.
And can you tell us any more about the potential share consolidation in US listing?
Yeah, certainly. First of all of these strategic considerations, which we talk about, start with the strength of our platform and our capital position. So these actually enable us to explore opportunities that, for our shareholders will maximize their return. So, in FY27, we had another really strong year of cash generation, which enabled us to both invest in organic growth and also to pursue capital management activities. So on the share consolidation, we currently at Zip have approximately 1.3 billion of shares outstanding, and this is comparatively high. So a consolidation would bring Zip's share count to a more level appropriate for a company of our size and market position. That's the key driver there, and we'll come back to the market in the next few months ahead of our AGM with some firmer proposals on that.
Gordon, thanks for your time today. For more reporting season coverage, make sure to check out Livewire's YouTube channel.